Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, today I'd like to talk to you about unlisted shares, and there's so much buzz recently about the shares of the National Stock Exchange. Apparently, the price in the unlisted space has gone up very quickly from 1,600 rupees per share to over 2,000, 2,100 rupees per share. And a lot of people are standing in line and trying to get in ahead of others to acquire these shares. Of course, there are several reasons why this has come to pass in the first place. Among them, the board of the National Stock Exchange stepped in and said that they would no longer have to vet new investors. That was one aspect. There was also a bonus share, a 4:1, that came through that resulted in the in making the NSE shares much more affordable for people to buy. And so the number of shareholders in NSE spiked from 33,000 to over 1 lakh in just about a couple of months. Now, should you be going out and buying unlisted shares? It sounds like a great opportunity, but just like every other great opportunity, there are significant risks for you to bear in mind as well. Joining me to talk about all of this and more, I've got Kshitiz Mahajan, the Managing Partner and Chief Executive Officer of Complete Circle Wealth Solutions. Kshitiz, thanks so much for taking the time. Let me start by asking you what the primary differences are between unlisted and listed shares. We know a few companies are selling like hotcakes right now, and they are heading towards IPO, but it's not necessary that all unlisted shares will eventually go to IPO, right?
Right. Good afternoon, Alex. And I know talk of the town right now is unlisted. So every time we interact something new, which is the flavor of the month. So investing is actually not like that, but just to make it simple, unlisted shares are the shares of a company which is not listed onto any exchange. So whether on to make it further simple, they are not tradable on any BSE or NSE or any other exchange. So these are the shares which are called unlisted shares, which are by virtue of some of the employees who have offloaded their shares, or let's say some of the small stakeholders who have offloaded their shares to some other people through off-market transaction. Now, off-market transaction means you don't transact these shares to any exchange. You do it one-to-one. That's how these transactions have been done. And there is no exchange, or there is no settler involved in this. So this is how you do this transaction, and that's how these shares gets offloaded in the market, and that's how there is no price discovery as far as transparency and price discovery which is there on these shares. So you find a name, let's say there's a listed name like Reliance or HDFC Bank, where you have some price given on BSE or NSE. There's hardly few bips here and there difference which is there, but that's the price which is there. But when you go to unlisted, any exchange, or let's say any platform who are doing this business, you open any Google sheet which you open, there's a different price you see on all these, on all these shares. So that's one part where there is a settlement as well as transparency issue with regard to unlisted shares. And yes, you're right. Not that every unlisted share you will see will go for IPO. Many companies we've been watching. The biggest example what you have quoted is NSE only. Since 2021-22, we've been hearing that IPO is coming, IPO is coming, IPO is coming. So I'm saying there's nothing against any unlisted company share, but all I'm saying is not necessarily every company will go for IPO. But yes, you can find a buyer, but not like a normal exchange where you have a ready buyer always available and there is a clearing operation which will settle the trade.
The other aspect is also regulatory oversight, right? Because the SEBI themselves have come out and said you should not, as a retail investor, be trading in unlisted securities because we don't oversee that trade. We don't oversee that market. It's not a regulated market. Is that right?
100% it's right. Because as I said, there is no fair price discovery. And yes, because till the time the company is not listed, it is not under prerogative of SEBI. So yes, SEBI always works in the best interest of retail investors. I know it looks very tempting. It gives a feeling of FOMO. But what is important for everyone to understand who are watching us, that yes, this can be a 3 to 5% participation in your portfolio. That too on a high risk basis participation in your portfolio, because it's not very liquid if you ask me. Because and if you want to liquidate also, maybe you not get the fair price at what you want to liquidate. So 100% right, Alex. I'm nothing against unlisted. It has a good market which in its place, but yes, we need to understand the nuances of how it works and how the regulatory framework is.
So let me get into a little bit of history here, Kshitiz. You've been in the wealth management space for a long time, so you are the perfect person to ask this. In maybe 10 years back, these deals were still taking place, but this has been the prerogative of very large investors, of HNIs that have access to a large amount of capital. And first of all, these lots that are sold in the unlisted space, or the shares that are sold, they're sold in large quantity, or the cost involved is very significant. So you're talking about deals that are in the crores rather than in the thousands. So how has that changed from then to what it is right now, where you have a lot of platforms that are offering this as well?
Well, it's 100%. I can vouch for that. That 8-9 years back, when we used to hear about any unlisted deal, it used to be in crores. There are private equity funds who are buying some stakes in the company, or let's say there are super HNI or family offices who are getting into these type of deals, which has to be in crores only. Now you hear there are deal going on about 150, 200 NSE shares, just an example, which means around 10-15 days back, around 1.6 lakh rupees, trade also happening, maybe less than a lakh trade also happening. So yes, the entire landscape has changed as far as the share unlisted market is concerned, because earlier, all the family offices which have that, level of getting into some risky bets, they used to trade in this unlisted market. But now everybody, as we have seen over the last 3-4 years, people are looking at that. Yes, mutual fund is there. You'll make some amount of money, but I'll make a much bigger kicker in direct stocks and unlisted. So that's a myth which I want to break here. That try and understand. Had it been so easy to make money, everybody will start buying shares and unlisted market only. So I'm saying that if you have time in your side, you understand business, well and good. If you don't have, follow a managed portfolio route. So I think that's one thing which has changed over a period of time, and which we have seen is now going back on track as far as the risky asset class on managed portfolios are concerned. We are seeing some sort of redemption, SIP stop on the smaller mid cap side. Similarly, you'll see this FOMO which is building it. People need to understand. They want to play. Yeah, you can play. Nothing against it. But yes, please understand. Don't go overboard while getting into it, because it has a lot of risk involved, which maybe HNI or family office evaluate in a better way, and they take a smaller bet on their bigger portfolios, which can be a couple of crores or maybe much more than that. But for your portfolio, you have to look at it, how much risk you want to take.
Yeah, because just because you're getting in early on in the cycle, and maybe before the IPO and the pre-IPO phase as well, it does not mean that you're going to get a pop. We've seen so many shares in the recent past, over the past year in particular, Kshitiz, that have hit IPO, and the issue price, it has fallen after that. It has traded much below the issue price, and there are several examples we can talk about. But let's talk about some popular companies where unlisted shares are changing hands very quickly. Of course, NSE is one of them.
Yes, I think largest exchange, 80% equity volume, 85% equity derivative volumes. I still remember 2018, it used to trade around 900, and then it reached 8,000, then 4:1 bonus came, split off 1:5, and prices again came back to 1,500, 1,600 levels. And it was hovering around that level only, going down to 1,500, sometimes 1,600. And then suddenly, the news came that there is no vetting of NSE board required for any client to buy, and you can buy in small quantity also. And delivery is available at 1 to 2 days notice also. Suddenly you start getting smaller lots, and suddenly we have seen there is miscommitment from many of the players, and people not honoring what they have said on a given price, because they realize that IPO might hit the market soon, and you might see that prices going up. So
let's talk about that, Kshitiz. Before we get on with this is a very important point that you've raised. Not honoring the contract, and this is ultimately, okay, this is a letter of intent. It's not really a hard-coded or codified by law kind of a contract. And I think it's important to talk about this, because the risk of that settlement in the listed space is taken on by the exchange. It's a counterparty risk that is taken on by the exchange. So you as a buyer of shares, you can be sure that when you place an order for 1 lakh of ABC company, say an HDFC Bank or a State Bank of India, you know for a fact that either you will get the shares, or if you don't get the shares, you will get your money back. And that's the counterparty risk. But in this case, there is no such thing.
100%, Alex. That's what I'm saying. It's a live example of what has happened in the past, because there was a news around the corner that IPO will hit the market, and many places it's just a letter of intent. People refuse to, and I have not seen any such news where you've not got your money, but people have not got their shares back. They've got their refunds after 7 days, 8 days, 10 days. They might have gone somewhere else and bought at little higher price, but now the prices, as you rightly said in the beginning, has moved from 1,600 to, I don't know, 21, 2,200, maybe more than that. Day before yesterday, I was hearing somebody was doing some deal at 24, 2,500. All I'm saying is that's the biggest risk with unlisted part. So, as there is no counterparty security which is there, as you are dealing with someone who you don't know. So please deal with your trusted partners, trusted brokers, and people who know. Otherwise, you might be in a position where either you're not going to share sometime you might have to get into a legal course also to get your money back also. So I think clearing cooperation ensures that you are getting your shares for whatever company on a listed exchange you're buying, but here there is no clearing cooperation. Here it's a deal between two individuals or you and some broker, and that's why it's very important for you while doing this trade to trust the right broker. So don't get lured by some price on some website that yes, we are doing unlisted shares and we'll give you a small quantity at a better price. Don't do that. Just look at a trusted broker and participate with that. So NSE, same thing happened. So I think again, it's a good company. Nothing against. There is no recommendation for anyone. I'm just saying that the business will do well, grow well. But you have to buy that company at a fair price. Let's say if you buy some company at X price and it will open at a X minus 10% price, then you have to hold that company for another 6 months. And there's a locking for people who are already a participant in the company. After the IPO, they have to wait for 6 months more. So I think we have to understand that at what price point we want to buy.
Yeah, it's an important point that you make, because let's talk about a few examples. Swiggy, for example, yes. is a company where I heard of a lot of people trying to pile into the pre-IPO phase, and they were locked in. The stock crashed, yes. And it only opened up for sale just a short while back, and it saw further selling. So, Kshitiz, can you talk of a few examples here where there is a considerable amount of risk, and unfortunately, because of the relative illiquidity of it, right now everyone wants a piece of NSE, but if things are not going well, you're not necessarily going to find it easy to find a buyer for the share that you're holding.
Yeah, so let's talk about two scenarios, Alex. Here, one is you're buying something pre-IPO and you're buying at a higher valuation. Then the gestation will increase for you to generate returns. Then you can't expect after 6 months of locking is over, you can sell. What we have seen in Swiggy, 350, when it opened at 500 again after the market corrected because of, it can be XYZ reason. I'm not saying there's a problem with the company. It can be XYZ. Initially it was US tariff, then India-Pakistan escalation. So it can be XYZ reasons. And suddenly we have seen share price valuations around the same price at what people have bought during pre-IPO times. But yes, then you have to wait for the right time. You can't just exit after the IPO is open. Second is that you already have a pre-IPO shares and you want to sell and exit from the market. So when you're buying, you bought, but when you're trying to exit, you're not getting the right price. Sometimes you're not getting the buyer only. So right now NSE has a volume in the market, but there are many such shares where there is no buyer. You want to sell, but there is no buyer. But on exchange, you might sell at 1-2% discount because but you'll get your exit. But here it is sometimes you are locked in and you're not getting exit. Sometimes in some companies which you buy as a pre-IPO, there is a defined locking for 5-7 years also. So, and after 5-7 years, who's guaranteeing it that they'll come out with the IPO? So look for a right guy, right management, right franchise. There's a lot of work which you have to do while buying a pre-IPO or unlisted shares. But on a lighter note, Alex, it's difficult. Sometimes it becomes so difficult to manage the unlisted part. So imagine the unlisted part where there's hardly any declaration, hardly any information available. Yeah. So I think keep it very simple. Don't put a larger chunk. Keep it 3 to 5% if you really want to try. Otherwise, do it a listed way. Managed portfolio is the right way to invest.
And also the taxation is different, right? Isn't it?
Yes.
How does it work?
it's not like a normal equity. If you sell, it's let's say if you sell on a short notice, it just get added into your income only, the profit which you are making. If it's 2 years, then it becomes a long-term capital gain for you.
And 12.5%.
Yes. But taxation comes later. Exit is something which you have to look at it, because NSE is a great company. Again, I'm saying, but it's not about NSE. There are a lot of shares in the market which gets traded, and they're good names, they are bad names. But then again, I'm saying, if you don't have the right information and you don't have that type of disclosure in unlisted space, so I'm saying that keep your participation little low on overall portfolio.
And there's also possibility of fraud in this case, right? I haven't heard of any, but then I was speaking to somebody in the newsroom. They were saying it's so easy for somebody, a relatively unknown person, to say, hey, do you want NSE shares, and then take the money and not turn up with the shares, right?
Bro, if you see, good names, good partners, you don't see that happening. You might see happening that they are returning money back. If the element is there that the share price is moving, although one should honor their word, that's what I feel. But yes, on small places where you don't know the other party and you have just met that party because of this NSE deal only, there are chances, or let's say some other stock whiches, there are chances where we have seen, that couple of places that, people are not honoring what they have told initially. Sometimes you make the payment earlier, stocks are not coming. Sometimes you have transferred the stocks, payment is not coming. So then you have to go through a legal course. But yes, I'm saying number of fraud what used to happen earlier, it has reduced a lot. But yes, to reduce it further or to make it almost negligible, go through a trusted partners only.
Just to round up, I know that you said 5% of allocation, but then now, unfortunately, people are unable to understand even risk when it comes to equity, right? So here we're talking about going even further beyond that, and you're talking about unlisted securities. How do you explain the risk involved? And we've spoken about several points here. We're not talking about capital loss, we're talking about inability to sell. So liquidity risk is there. We're talking about valuation risk, where because there are not enough buyers and sellers in an unlisted space, there is no true discovery of price. There can be huge fluctuations. So who should go into this? It's not all retail investors as well.
100%. We are not even talking about mark-to-market equity risk. We are talking about counterparty risk. We are talking about regulator oversight risk. We are talking about liquidity risk. We are talking about locking risk. We are talking about payment default risk. We are talking about shares not coming risk. So I'm saying it has its own plus and minuses. But my sense is that 5% on a higher side, I said, Alex. My sense is that people who can write off this 5% part in a way that was okay, fine, I can wait. Or maybe I have that other part which is less risky, which on a portfolio side I'm taking. They can buy this. And people who understand that, yes, I'm doing it through a right set of partner or right set of people whom I trust, I can do this. I think this is something very important, where you do these deals, but through a right channel. Because here, the trust part becomes much more important. Clearing operation is not there. Counterparty risk is there. So then the party which you are engaging with, you should know that party very well. And that's something, the core of when you get into a unlisted space. Second, don't buy anything or everything. Because it's unlisted, you know the party, there is no counterparty risk. Try and understand whether that company will do well or not. The business scope or growth is there or not.
Examples of this. There are a few examples of this, right, Kshitiz? Because even while they're currently in the unlisted space, we're talking about IPL, businesses, franchises. CSK has done well, and a lot of investors I know have gotten into this and have held for a while. But equally, there are others that have not done well, right?
Yeah. So CSK, one example. 2014 when it get demerged from India Cement. Initially the price was around 20, and then it started moving up. And then the news came about RPG Goenka Group buying Lucknow Supergiant at 1 billion valuation. Suddenly, in 3 days' time, the prices moved from 180 to 250, and again it came back to 170. So I'm saying, so people who have been holding and maybe they have exited at that price, maybe they have made money. Think about the people who have bought between 200 to 240 to 50. So sometimes I think allowed us to set. Sometimes there is an immediate knee-jerk reaction in our price. What happened? But CSK is a good franchise. Any good global football franchise also you see a 3 to 4 billion valuation. So CSK right now has 650 million valuation. So I think it will do well. And that's my personal view. Again, there's no recommendation. But I'm saying there are many such franchise, there are many such football franchise, many such hockey franchise which have not been doing well, where there's a listed part which is going on. So I'm saying, I don't want to quote anyone. All I'm saying is that please look at it, that what is the revenue stream of a company which you are buying. CSK might not be, it's the last in the pool table in IPL right now, but it's much part of the revenue doesn't come from IPL, it comes from the ad which they get. So I'm saying, please understand the revenue stream, from where they make money, how the money growth looks like, where they're investing their surplus, and that's how, what type of management you are looking into. If management wants you to make money, only then you make money.
Yeah,
So
very true. Very true. Yeah, and in the listed space as well, the focus has now returned after a brief space of people saying, okay, cash burn is normal. Again, we're talking about profits being very important to look at, and I think that's evident across the board. So, Kshitiz, thanks so much for joining me and for putting light on this very important issue. It's not for everyone, very clearly.
Right, Alex. Thank you.
Thank you so much.